Our best calls are on day 1-7. They're like, hey, I'm really glad I put this in here because my deal just fell apart, and you're going to save me $1 million in tax that I would have paid. Those are our favorite calls, really, because we just added a whole lot of value to them.
Yeah. The other question that comes up is timing. Like, oh man, I know all about 1031 exchanges. Oh crap, Brett just told me all about this cool thing called DST. How long do you have for to engage with someone like yourself and all the sort of timing and setting up and all that sort of good stuff?
And that's our role, right? So I'm sort of like the offensive coordinator. If you imagine there's a football team we're all playing, okay? And maybe it's rugby from where you're from, right? And there's the tax attorney, there's the QI, there's a commercial real estate broker, there's the financial advisor, and they all play a role. And imagine there's a Roman legion, and we all have our shields with the little spears, right? And we all play our role, and the client's in the middle, and we're trying to keep away the tax from being triggered, okay? So that being said, generally speaking, we want to engage the client early with the education, okay? We want to enter in a key phrase into the purchase and sale agreement or an addendum on a counter before the buyer removes all contingencies. And the phrase is simply this: seller has the right to a deferred sales trust or a 1031 exchange and no additional cost to the buyer. You probably already put that in your contracts now, right, Reed?
Yep.
Seller has the right to a 1031 exchange and no additional cost to the buyer. So it's very common, but we just add or a deferred sales trust, and that creates a placeholder. And again, it's just an option. The next thing is at close of escrow, we can close on the trust, or day 46 or day 181. I'll give you a live example right now. We're helping a gentleman. They're selling a $7.3 million multifamily property outside of Atlanta, Georgia. Okay, they're longtime California residents. They don't want to overpay for property. But they did find a nice deal, a nice development deal. So they're going to take a third. They're going to do a third into the deferred sales trust. They're going to do a third into this 1031 deal. And the other third they're going to do into a little bit of a Delaware, because they have what's called a mortgage over basis issue, which is another topic. But essentially, it's flexible. You can do 1, 2, or 3, or a mixture of each. And the key is keeping 100% tax deferral. So as long as we have that language in there, and then we have a QI company who will cooperate. We have QI companies who will cooperate and give you both options. But the key here for us is we never get paid unless and when you close the deferred sales trust. So we actually do all of the education, all the tax and legal work. We will prepare you for the option. But if for some reason the deal falls apart, Reed, no problem. If the buyer backs out or you just decide I want to do a 1031, no problem. We just want to give you the option. Our best calls are on day 1-7. They're like, hey, I'm really glad I put this in here because my deal just fell apart, and you're going to save me $1 million in tax that I would have paid. Those are our favorite calls, really, because we just added a whole lot of value to them.
Interesting. No, I have a client actually who's looking to 1031 out of his deal, and we're looking for a deal for him. I need to reapproach him and make sure he has that or DST in his purchase and sales agreement.
Deferred Sales Trust, not to be confused with the Delaware.
Yes.
A Delaware is just a mutual fund of properties that someone's 1031 into. 1, 2, or 3 big corporations. They can serve their purpose, but sometimes you're overpaying. There's some really big fees. But make sure it says or a deferred sales trust, and they're both DSTs. Okay.
Yep. So back to the timing thing. So there's no getting set up on onboarding with someone like yourself. What's typically the time to get it all happening?
So we don't like fire drills. We've done deals in a week.
Right.
But no one wants to have that stress. Ideally, we're at least 30 days before close of escrow. If buyers have removed all contingencies, okay, and there's no 1031 option, we're going to say, sorry, you're too late. We can't help you.
Yep.
So it needs to be early, okay? Early before the buyer removes all contingencies, or it's at a 1031 company. But remember, 1031s are only for investment property. So primary homeowners, which this is a unique stat for your commercial real estate syndicators. 50% of America's net worth is tied to commercial real estate, high-end primary homes, and private equity, okay?
Yep.
And 2 of those 3 do not work for a 1031 exchange. Only 1 does, okay? So as a syndicator, if you can attract high net worth primary homeowners or business owners, again, we work for businesses, okay? Then they can sell, diversify, and invest in commercial real estate. It's a great tool. So earlier the better.